What's up, everyone? China stocks are exploding to the upside today. If we look at Alibaba, it's up nearly 26%. BIDU is up 26%. PDD is up 47%. These stocks are blasting to the upside in just a jaw-dropping way. In this video, we're going to explain why they're popping up and what my opinion is on this whole setup and if it's a good time to buy or not. So let's get right into it. So we can see the headlines are saying today that Chinese stocks trading in the U.S. rocket higher after China signals support for the shares. We can see the second bullet point right here says regulators from both countries are progressing toward a cooperation plan on U.S. listed Chinese stocks, according to Chinese state media. And just to give everyone a little bit of backstory, basically over like the past year or so, maybe a little bit longer, all U.S. listed Chinese stocks have been getting absolutely destroyed. Alibaba went from like $320 in October of 2020 all the way down to lows of $72 yesterday. It has been brutal, to say the least. But here's the thing. Alibaba is actually doing very well fundamentally, but the main reason it's falling off the board is just increased regulation fears and rising tensions between the US and China, and even fears of a possible delisting situation, not only with Baba, but with other Chinese companies. So basically, there's been a lot of fear with Alibaba and, regulation news and all that, and it has caused a lot of selling pressure. But here's the thing. The Chinese state media came out and said today that, like I said, they're progressing towards a cooperation plan on U.S.-listed Chinese stocks. And then if we scroll down a little bit, we can see they reported the Chinese government supports the listing of companies overseas and said its crackdown on technology companies should end soon, the state media report said. So it's like they straight up said, yeah, we support the listing of companies overseas. That is big news. So it's like, that's why the stocks are popping up today. And like I said, these companies are actually doing very well fundamentally, or at least a couple of them are, like Alibaba. Like, you look at some of these companies' fundamentals, like Alibaba, like their revenue is just growing exponentially. We could see, in 2021, they reported just insane growth. They're cash flow positive. Their price-to-sales ratio is 2. A price-to-sales ratio of 2. That is insane. That's good. That's good for everyone, just so you know. They're a profitable company. They're growing. And the main risk with a lot of these Chinese companies that people like to keep in mind is that they say, all right, well, what if these numbers are fake? What if they're lying? And that is a risk. To be fair, that is a real risk. But here's the thing. When you have revenue like Alibaba is posting, and then you have the valuation it's trading at, it's like, yes, they might be lying about their numbers. They might be. And that is a risk, but it's like the price you're paying for that is worth the risk, in my opinion. I'm someone who owns Alibaba, and I will own it for the next couple of years. I like the risk-reward setup. Does this mean it's guaranteed to go up? Absolutely not. But for the valuation you're paying for this, it's worth the risk, in my opinion. And don't even just take my word for it. Look at someone like Charlie Munger, who has decades of experience in the market. He's doubling down on his Alibaba position, and he owns the stock too. So it's like, when you see the smart money flowing into these stocks, and you see their revenue numbers, and you see the valuation they're trading at, it's like, it's worth the risk, in my opinion. So take that however you want. It's not a safe play. It's not. If you're looking for like safety and security and all that, check out an ETF like VOO. This is just like the S&P 500. It'll be a lot safer, but then again, you will not have the same returns with the S&P 500 as you would a specific company like Baba that has been beaten down significantly over the past year. And there is nothing wrong with that. It's just a more volatile stock. So take that however you want. But looking at some of the plays today, Alibaba, it's up 26%. It is blasting to the upside. Some of the other ones are BIDU, BIDU, up 26%. Tencent's another one. TCEHY. This is another one I own for the long term. It's blasting up. We have PDD. This one's up 49%. Crazy. JD up 33%. Another one, KWEB. This is just an ETF of multiple different China stocks. This one's up 30.5%, so they're blasting up. Now, I will say this, though. If you trade options, I would be very, very careful right now because the options are still overpriced on these ones. Be careful. Be careful if you're trading options. Check this out. So if we go to the max weekly chart on Alibaba, we can see this blue line all the way at the bottom. This essentially represents the relative price of options. Technically, it's implied volatility, but the main thing to know is the higher this blue line goes, it means options are expensive. The lower it goes, it means options are cheap. We can see this blue line is still very high right now. That means the market is anticipating a lot of volatility over the coming weeks, okay? So because of that, you will pay a premium if you buy any option on these Chinese stocks, whether it's BABA or BIDU or any other Chinese stock that has high implied volatility, which almost all of them do right now. So whether you're buying calls or puts, you're definitely paying a premium for that, which is not good. Because of that, if you want to play these, check out shares instead. It'll be a lot easier to break even, and it definitely gives you unlimited time. You know, you can hold shares for as long as you want. Options expire, so keep that in mind. But overall, these China stocks are blasting to the upside. I am holding Alibaba and Tencent for the long term. BABA and then TCEHY. I also have a little bit of KWEB. So check it out if you want to. Like I said, they are not safe plays, but for the valuations they're trading at, it's worth the risk in my opinion. So keep that in mind. Like I said, if we look back at some of these fundamentals, like the numbers they're putting up are just, they're insane, you know. And like I said, it is possible for Alibaba to be lying about these numbers, but with the valuation they're trading at, it's worth risk in my opinion. So overall, I hope you guys learned something from today's video. If you're looking to analyze any company within seconds, check out that first link in the description and the comments down below. You can type in any company, like I'll type in, let's say, Apple, for example. You press enter, and then within seconds, you will see the most important data that is driving that stock price. You can see their revenue over time in an awesome and nice visualized way. You can see their cash flow, their profit margins, net income, total assets, debt. Like, you can basically see it all. And we're cheaper than our competitors, cheaper than Yahoo Finance and a lot of other people. And like I say a lot, we are adding some amazing things to this tool, and you are not going to want to miss it. The updates are coming out in a couple weeks. Prices will definitely be rising with this tool. And if you decide to sign up now, you'll be locked in at your price. And when it rises, you'll be locked in. You'll be grandfathered in. So check it out. It's an awesome tool. I use it every single day. And if you're looking to invest into companies, I think it is a necessity, you know, because it shows you exactly what you need to know. It shows you the critical information that is important to know when investing. So check it out. Besides that, thank you guys so much for watching.